What if the biggest financial risk in your life is actually your job itself? Now, you may feel like you've done everything right. You've built the resume and climbed the ladder and become valuable, maybe even indispensable. But in doing all of that, your entire financial life has become linked to a single source of income, your job. And many times in such circumstances, this narrow form of success can actually start to feel like a prison. And it's risky with everything going on in the world today. We're living in a very uncertain environment with layoffs and AI-driven disruption and geopolitical change. And a growing number of people that I talk to are starting to ask themselves, how do I avoid having to be on this treadmill forever? Today's guest, John Ostenson, is a firm believer in a different path, one that sits somewhere between corporate life and high-risk startup culture. John is the founder of Franbridge Consulting. It's a top franchise consulting firm that helps their clients to acquire and scale cash-flowing service businesses, often while they're still working full-time. And before you tune out because you heard the word franchise, this conversation is not about opening a fast food restaurant. It's about ownership, predictable cash flow, time freedom, and lifestyle design. And it's why more and more working professionals are rethinking what success actually looks like and considering franchise models. So in our conversation today, we're going to talk about the hidden fragility of career-based wealth, why service businesses are attracting smart investors right now, the biggest myths that people have about entrepreneurship and franchising, and how to think differently about risk, freedom, and the path ahead. I'm J.R. Lowry. This is Career Sessions. John, thanks for joining me today.
Hey, J.R. Excited to be here.
Yeah, looking forward to talking to you about the work you're doing. I know you spent a long time in corporate leadership and then you moved into entrepreneurship and investing. And essentially, you've kind of gone from, as I think you've described it, earning income to building ownership. So what really changed and drove your distinction between those two?
Yeah, I think I could have done the corporate world forever, but you only live once. And I had that desire to build my own thing, right? To seek that freedom that everyone talks about. And, I think most people have that in them and some will step out, some don't. But, it's kind of through circumstances that roughly a decade ago, I was in my mid-30s and started doing some networking, trying to figure out if I were to leave a large public company, what would be a good private company where I can step into and kind of sidestep into entrepreneurship that way was my thinking. And circumstances worked out so that I had the opportunity to come in and run a large franchise system called Shelf Genie and just saw how we're supporting franchisees all across North America, a lot of diverse backgrounds coming together under a shared system of support. And we're allowing them to fulfill their dreams and become business owners, but with some training wheels. And so I really fell in love with the franchise model through that experience and have invested in franchise myself since then.
A lot of people think about franchising and they think about restaurants because that's probably what we all know best. But there are many, many, many different franchise models out there. Some of them, I guess I would describe as being less familiar to people, but still potentially really lucrative.
Yeah, and we've got nothing against the food guys. We certainly need all of them, but my humble belief is there are easier ways to make money and that may require fewer employees, less operating hours, higher margins, oftentimes less CapEx investment. So it's fun for us to take clients through the process of identifying the top opportunities that are looking to expand in their area. Probably 90% of the time, clients get into businesses and industries that were never even on their radar. So there's just so many different niches within home services and property services, different B2B services, businesses that cater to the senior population or to kids or to pets, to health and wellness. Again, things that if I were to break those down even further, things you probably don't have on your bingo card when you hear the word franchise.
How many of your clients that you work with go into these franchise opportunities, running them actively themselves, and how many of them go into them, or what percentage go into them, looking to hire a general manager and run it more as an owner and not necessarily as the operator?
I would say roughly half and half. There's an owner-operator model, then there's what franchises oftentimes refer to as semi-passive or semi-absentee or executive model. You'll hear those terms. And the idea is that you put a manager in place. I prefer the term semi-involved. I think that's a better, you're still going to be involved. And really the amount of involvement that you put in is dictated by who you put in that seat. But if you've got a great operator that's incentivized, that's going to run it like it's their own, you've got a strong franchisor supporting them, they can carry a lot of the daily support water and take some of that burden off you. So it is a very common approach in franchising.
Yeah, it's interesting. There was an article in the Wall Street Journal just this morning about this idea of passive income, which seems to be very much in vogue right now. And I feel like it's probably, like many trends, getting past its prime in the sense that people think that they can make anything passive income, including having a full-time job, that they can do that in just a few hours a week and still get paid for it. Franchising is work. I'm sure you want to make that point that it's semi-involved, that you can't just sort of set it and forget it, that you've really still got to be engaged in this.
I actually read that same article this morning. And of course, we hear these common themes all the time about creating passive income, trying to free up flexible time for the family, live life on your terms. It's what everyone's marching towards. But I do remind people that if business ownership was easy, even franchise ownership, everybody would be doing it. It does take work, but there's a reason why you can make outsized returns. There's a reason why the government incentivizes through the tax code business ownership, whether you be creating jobs or stimulating the economy in different ways. So there are a lot of benefits to it, but it does take work. And a lot of our clients will start out with one franchise and then expand to other locations. They'll buy other franchisees in the system. They'll come back and buy additional franchise brands. In those cases, you're not running each of those right from a daily standpoint, but you got your hands dirty, and then relinquish the reins to someone else.
It feels like we're in this environment now where a lot of people who are in their 30s and 40s feel successful on paper, but they still are really heavily dependent on their job. And then you've got affordability issues, whether it's food or housing or daycare or whatever, that are creeping in. Do you think that realization's hitting people more than in the past?
I would say so. I mean, we're certainly seeing more interest than we've ever seen in business ownership. I think for a variety of reasons, certainly AI is playing into that. All these headlines that we read about, I see it playing out in real time all around the country. I think a lot of people are being asked to do more with less. They're saying, hey, I'm capped as to what I can make, and yet I'm putting in a ton of effort, again, building someone else's empire. And people talk about business ownership can be risky. I would argue that working for an employer at their whim is risky. And so I think one way that people look to de-risk the idea is to acquire an existing business. ETA, that's a big thing today, entrepreneurship through acquisition. And I actually just wrote an article on this a couple of weeks ago where I talk about franchising versus ETA. If you find an existing business, that can be a great proposition. But most of our clients, it's taking them 3 or 4 years, and they're like, gosh, we keep looking. And then they'll come to us and say, well, actually, maybe franchising makes sense. It allows us to get in the game. We could still acquire existing businesses down the road. And once you're in a franchise system, you're also going to get first line of sight into any other franchisees in that system they're selling. And so a lot of our clients will get into a system and over time expand through what I call internal M&A, if you will.
Is the buy-in typically for a franchise model lower than an ETA model that you were just describing?
Yeah, in most cases it would be, because if it's an existing business, you're paying a premium for that. And you're making the assumption that everything is going to continue as it has been, as it is on paper. But we all know whenever you have a change in ownership, and there's going to be a slight change in culture, you may lose key employees, key clients. And so I make the argument from my standpoint that franchising allows you to get in the game, allows you to have a proven business model, but you're able to put your thumbprint on that organization and that team and that culture from day one. And what's interesting is when you look to sell that business down the road, there's been research done that's shown that franchises actually trade at a higher multiple on average than non-franchises in like-kind industries. So there is definitely value in that resale buyer's perspective on the franchising front.
Do you see most of the people who are getting in that you work with, are they buying an existing franchise, or are they starting a fresh one that's expanding into their area?
Yeah, probably 90 to 95% of the time it would be a new area. And it's not that there's lack of interest in resales. It's just that, again, the good opportunities in the franchise resale game go to other franchisees in the system. They never hit the open market. So that is a dynamic we see oftentimes.
And do people do this on top of their full-time job, or do they fully switch out from what you're seeing?
Yeah, about half and half. So about half would make the jump. And maybe they have a spouse that's working and they're saying, hey, we're going to be the ones to get into this. Sometimes their spouse is at home. So about half are going with that owner-operator, usually with the idea of replacing themselves eventually in the business. The other half say, hey, we want to keep our day job, at least for the short term, and we'll put a manager in place to run that business. And again, it just comes down to having a good jockey. You can have a great horse, still have to have a good jockey.
If you go with that latter model, John, what's your view on what success requires? What do you need to do as a semi-involved owner to make sure that it's actually going to go well?
Yeah, number one is finding the right franchise system. This is essentially a partnership or a marriage. And so finding the one that will support that manager in a significant way. So you're not the go-to for all their daily questions. But then, finding the right candidate, and it's setting them up for success, whether that be through the incentive program. In some cases, clients of ours will give equity. They'll open up the cap table to incentivize. In other cases, they'll give quarterly bonuses or what have you that act as equity, like a profit sharing type program. So in my experience, if you have the right individual in that seat and they're incentivized, then it can be a great model because you can be incredibly hands-off. But if you don't have the right individual, then you'll lean in until you replace them and find the right person.
What are some of the particular franchise opportunities? What are the categories that are most exciting for you right now?
Oh, wow. There's so many unique models. I'll just mention a couple of franchises where maybe there's only one or two players in that space, like from a national standpoint, like teen driving school. It's required in 36 states, and there's only one franchise in that space. A lot of interest in property services. We're seeing a lot of smart money flowing there. So some of the businesses I own, I've got one that provides asphalt paving and line striping, so parking lots. I've got another one that provides temporary containment walls around renovation projects. I've done a couple of pool cleaning deals in the past couple of months, cabinetry, flooring. And each one has kind of a unique to it as far as how they approach the competition. A lot of times they're more advanced from a technology standpoint, and they're going after these highly fragmented, unsophisticated, competitive industries, right? And so you're able to stand out. We're seeing a lot of interest in the senior space. We've had a number of clients get into in-home senior care, as well as businesses that maybe serve as a guide, and they become like the broker, if you will, for different senior facilities. Or we have some clients that have gone into a great one that provides wheelchair ramps and stair lifts and mobility solutions in the home, allowing people to age in place. But end of the day, they're B2B services ones like cost mitigation consulting or freight brokerage or insurance adjusting. We've had a lot of physicians and doctors get into ones like restoration and things that they weren't trained in, but they have some intellectual curiosity and they see the need there in their market.
It's just interesting watching all of these things play out. I think continue to go from having very localized markets, mom and pop kind of model, to more nationalized, people doing roll-ups or trying to nationalize different business models that before were very much local businesses.
End of the day, they're still local owners, right? They're local businesses, but they have that broader effect. I mean, I think of another one. I met with some founders last month out of Boise, Idaho, that have a truck that carries about 200 gallons of diesel and will go around and fill up vehicles, fleets, and construction sites and stuff. I mean, again, those niches that you don't think about, but they said, hey, this is applicable all across the country. Let's franchise it as a way to scale, and they're going to be able to grow more significantly and then get better pricing on fuel. And they're going to have locations all around the country with people that are highly incentivized because they're business owners, not just employees.
So talk a little bit about the process in terms of how they come to you and how you work with them and get them up to speed on the opportunities that might be available to them.
Yeah, I would think about it like a real estate model. If you were going to buy a home and working with a real estate agent, that's essentially the role that I play. My clients never pay me a nickel. Instead, I get a referral fee from the brand on the back end when a placement happens. None of that's passed on. So it's a nice, clean model, just like in real estate. We work with over 600 different franchises that are looking to expand, part of the largest network in the country. And the way the process would work is, let's not sit on the sidelines and do personality tests and hypothesize around businesses. Let's get in the game. Let's look at real opportunities in your market. So we'd have an introductory call. And then shortly after that, I would come back to you and say, hey, based on the feedback I got from the franchisors, here are the ones that are open, looking to expand. We'd look at maybe a dozen or so companies out of the gate, give you some good exposure to what's out there. You'd pick a couple to have a conversation with that we can always iterate from down the road, but that kind of gets you in the game. That's where the magic starts happening and you start comparing and contrasting. And so I kind of hold your hand through that discovery process. It takes about 2 months on average, but you're getting a chance to talk to all types of people there at the franchisor's company. You're talking to other franchisees and their system, hearing about their experience, asking questions. So the goal is to get you as much information as possible. I'm there to be a sounding board, but also provide funding resources. Or if you want to have a franchise attorney review the agreement, we've got all those types of partners to support as well.
I know you're based in the Atlanta area. Do you work with people all over the country?
All over the U.S. and Canada. Now, I've done placements in just about every state that has at least 500,000 in population.
How do you, being based where you are, get a sense of the market and help your clients evaluate whether that market is a good fit for that franchise?
Yeah, there's a little bit of art, a little bit of science to it. So we kind of start at a 30,000 foot level where we're looking at businesses that have done well in comparable markets and introducing those. And sometimes clients will say, hey, I know this one's saturated in my area, or gosh, there's a huge need. I'm not privy to that, right? There's a little bit on their end. But once they start talking with the franchisor has information at the zip code level from a demographic standpoint. So they could say, hey, here's how we would define that territory. We'd include these zip codes, not those. And then from there, I encourage clients, once you get pretty serious with one, do some secret shopping, go visit them, go visit the locations, or have them come in and give you quotes and find out who you're up against. And so, yeah, we kind of start high level and boil it down. But many of these businesses are pretty geography agnostic to some degree. I mean, there's going to be some that just don't make sense in a certain market, but if you think of like pool cleaning as an example, the one that we really like started in Canada and now has a presence across the U.S. So sometimes it'll surprise you.
I'm sure people come to you with all sorts of misconceptions about franchising. What are some of the most common ones that you hear from people that you have to dispel?
Well, I think the one we kind of hit on already around the franchise will run itself, right? If it ran itself, then you wouldn't be needed. Franchising gets grouped together like so many other industries where we talk about franchising. End of the day, it's a couple hundred different business models across a couple thousand companies. And so it is hard to generalize too much. But I would say that the role of the owner, like we talked about, it's not going to run itself. And every now and then you'll have a franchise that does not provide great support and it'll catch some headlines. You see this sometimes in the food space. I hate that. But again, every industry's got good players and ones that aren't as good, and franchising is no different. And certainly that's where we come in to help. I think oftentimes also people overlook some of the benefits associated with franchising. Like you're stepping in, not just getting support from the franchisor, but you're in business for yourself, but not by yourself, to be cliche. You've got a mastermind of other franchisees and you're learning from each other, making sure you don't make the same mistakes that someone else made, and exchanging best practices.
I know you've used the phrase recession-resistant cash flows. Some of these businesses you see as being relatively immune or maybe even beneficial in a recession kind of environment. What makes certain businesses more durable or attractive during periods of economic uncertainty?
Yeah, I'd say less discretionary spend reliant type businesses. So think about what people are always going to spend on. They'll spend on the things they care about: their kids, their aging parents, their pets, their homes to some degree, and their health. And so there are some more fashion forward, if you will, franchises out there that, like in the health and wellness space, whether it be peptide injections or some of the recovery modalities. In some cases, people may cut back on those things during a recession, but they're always going to spend on the caretaking for their elderly parent, right? They're always going to need a daycare for their kids. And so we think about what will they continue spending on. And one thing I've noticed is, when it comes to business ownership, I joke that non-sexy is the new sexy. Yeah. And people like those understandable cash flowing businesses, the Serve Pros of the world, right? They're not going to go out of style.
I don't know if you know Cody Sanchez. I see her pop up in my LinkedIn feed all the time. And that is like her mantra, basically, is that there's a lot of money to be made in these businesses that are seemingly pretty boring.
She's got a great following. She does a great job with her content. And again, a lot of our clients have been following her, but they haven't found that business. And that's where they say, we like the idea of franchising gets us in the game.
You work with a lot of different franchises. I think you mentioned 600 a minute ago. How should someone look at a franchise and evaluate whether they're really good and really healthy versus just good at marketing or have an economic model that really just benefits the franchisor and not the franchisees?
Yeah, it's certainly tough if you Google around online, because even if you come across a top 100 franchise list, most of the companies have actually paid to be on that list. It's a PR move. So that's where we come in and we kind of have those relationships, see behind the curtains. And some of the things that we think about, certainly track record would be the biggest one. But the fact is, if a franchise has 50 locations, 100 locations, they're going to be sold out in a lot of the areas that you would want to be in, right? So oftentimes we are working with ones that are more emerging, that are newer, but the things we look for are strong financial model, competitive advantages, some uniques about the business. Their existing franchisees have to be happy with their experience. And then we put a lot of weight in the leadership team. We want to see not only a good blend of industry experience, but also franchise experience represented on that team, people that have supported successful franchisees and other systems in their background. As I said before, a little bit of science, a little bit of art to it, because like any industry, not everyone's created equal.
Let's come back to some of the trends that are driving this, particularly the idea for optionality and time freedom. What do you hear from people who've stepped into this that you've worked with that maybe surprised them either positively or negatively about what that transition is like for them?
Certainly, we've heard, hey, it's more work than we thought, but we've also, I was catching up with a client yesterday that had bought maybe 3 years ago. He actually relocated to where the franchise was available down in Fairhope, Alabama. He's done incredibly well. He's dropping a little over $400,000 a year to the bottom line, very happy, and he's now ready for his next franchise. And but I'd say walking with him through that journey, early on, it was a new franchise. They were selling quickly. They had a lot of things going for them, but in some ways, there was a little bit of guinea pig, right, with the early franchisees. So I always want clients to go in eyes wide open to that being the case. In some cases, it's a little bit of a blend. You want to get in early to get the territory, but you're also kind of stepping into something that's a little bit newer and they're still figuring some things out. One thing we haven't hit on, JR, that I think would be helpful is kind of the financials around it. People oftentimes say, well, how much is this going to cost, right? Because we'll know McDonald's are incredibly expensive, and then Chick-fil-A has this unique model, right, that's very different from an investment standpoint. So in the non-food space, to kind of level set, if you look at your franchise fee and your startup cost and several months of working capital, essentially you're all in investment range. If it's a customer-facing retail, physical location type establishment, you're probably all in 300 to 600,000 in most cases. Now, I had some clients buy 10 trampoline parks at 3 million each, but most people aren't doing that.
Yeah.
So let's just call it 5 or 600,000 on the high end. Then on the service-based business, which is about what 2/3 of our clients are getting into. So think in-home senior care or some of these home services or consulting services. Your all-in investment tends to be more like 100,000 to 250, kind of in that range. A lot of our clients may be sitting on cash where they could fund it, but they like the idea of leveraging. And SBA loans tend to be very common. Banks obviously prefer lending to franchises. So probably more than half of our clients will use SBA loans where they put in 50,000, then leverage the rest. Another strategy a lot of people employ is to use what's called a ROBS program, and that's a retirement rollover. So you can take a 401k or IRA. It's got to be from a previous employer. It can't be your current one. Then you can purchase the business that way with the retirement plan and then pay yourself a salary. So a lot of ways to make it happen, but I think it is eye-opening for people sometimes to say, hey, this is more realistic than I thought it would be.
And what does the payback period typically look like? If I'm putting that $300,000 or $400,000 or $500,000, $600,000 in to pay the franchising fee and working capital and those kinds of things, how long does it take me to earn that back?
Yeah, the biggest variable there oftentimes is whether you're running the business yourself or you're paying someone else to, right? Because that will be enough you have to cover. So let's just say that you're running the business yourself. It'd typically be a little bit longer if it's a retail business because you've just got the lease payment, right, that you're going to have to cover as well. But in a service-based business, there's some, JR, that are cash flowing from day one. Maybe the initial marketing drove it and you have low enough overhead. I'd say most of the time you're probably around the 6-month mark where you have a positive monthly P&L. That's how I think about it. I always want our clients to go conservative, so let's call it 9 months and round up.
Sure.
If it's a retail location, it may be kind of in that 6 to 12 month window, more than likely. And if you're paying someone to run the business, it may be a full year before you're cash flowing.
In terms of, I've turned profitable in 6 or 9 months, and then I'm starting to generate a profit on an operating basis, but I've got this upfront piece. How long does it take to earn that back, pay back those SBA loans, whatever you've chosen to do to finance the business?
Yeah, obviously, if you're in that 400 to 600,000 retail range, it's going to take potentially 2 or 3 years. In a lot of cases, it may be even 3 to 4 years if you're paying a manager. But you are also building an asset that you're going to sell, right? It's not just that you're throwing money in. What you're putting in, you should be able to get back in theory, and you're getting tax benefits along the way. But if it's more of a service-based business, that payback period could be 12 to 18 months in a lot of cases. If your all-in investment's 150,000 and you're at a run rate now kind of going into that second year where you're dropping a little over that to the bottom line, then again, I'd say where we see a break point oftentimes is around that 12-month mark where, it's not that you made X amount in the first year, but you're now at a run rate of X amount going forward. Right. We've got a number of clients that have done $1 million in revenue in the first year. But most of the times, it's probably between months 12 and 24. If it's a business capable of hitting $1 million, that you would get to that run rate during that time period.
Yeah, and I would assume that you work through your clients with the financial modeling and the different scenarios in terms of how things could play out as well, right?
Yeah, from a fairly high level. I don't get super granular with them. That's a little bit more on the franchisor side to make earnings claims around. But they'll have a pro forma template and kind of the expectations. And they take you through what's called a unit economics call where they'll dig into the details. But another data point that you get is talking to other franchisees. And they can open up their books as much as they're willing to, right? Everyone's a little different, but they can give some good feedback on how quickly they turn to profit and that sort of thing.
You mentioned a minute ago that this is an asset, right? And I know you view this in some ways as part of a portfolio diversification strategy for somebody thinking about saving for retirement, building wealth, just like you're investing in stocks and bonds, and maybe you have a house, maybe you have rental houses. This is another asset class to consider. Talk a little bit about why you feel like this is an important part of that equation.
Yeah, absolutely. I'm a big alternative investor. I'd say when I look at my investments, probably 25% is in the public markets, but 75% would be in things, everything from private credit, private equity to real estate, syndications and funds. And for me, it's an all of the above approach. I like the role real estate plays in the portfolio, be able to take the depreciation and offset some passive gains. I like business ownership because you can offset a lot of active gains, active income, especially early on. But there's so many things you can do with business ownership as a piece of that portfolio outside of it just not being correlated to the public markets in a significant way. But you can pay your kids through the business, and then they have earned income, and you set up Roth IRAs for them, right? It kind of gives them a leg up. Certainly, you can take a larger defined benefit plan if you want to bulk up your retirement. Certainly, write off home office expenses or vehicle expenses or cell phones or internet. Again, when you start thinking about the possibilities, it's just kind of a third dimension to cash flow, building an asset, but also the tax benefits. That's how I think about it. Obviously, again, it takes a little more effort than a passive investment, but there's also benefits to that.
Thinking about that risk-reward balance, you need to do that with any asset class, right? And it makes investing in a certificate of deposit very different from investing in the equity markets, different from investing in real estate, and different from investing in this. How do you help educate your clients about the risk differences that come from being in one of those more conservative asset classes, and also from being an employee to being an owner?
There's operator risk. I mean, end of the day, business ownership's not for everyone. I do believe there are a lot of people on the sidelines that should be in business ownership, but there are some that shouldn't. But I do believe franchising is a better path for most people because you get that support system. You're stepping in to someone who's already had an established product market fit. And again, you get that support not only from the franchisor, but other franchisees, and a lot of training, a lot of support along the way. And so we talk about it, but yes, there's certainly risk to anything. And if it wasn't worth doing, there wouldn't be risk to it. And I like to share an example. I placed 9 different clients with a franchise a couple of years ago in the property services arena. We had some clients do $1 million in their very first year with that one. A lot of clients did very well. One client went out of business up in New Jersey, and he was a marketing guy. I thought he was pretty smart. I reached out to the franchisor who I knew really well, and I said, help me understand what happened here. Everyone else is thriving. And he said, John, we've done everything we can to support him, but he came in and candidly, he thought he was the smartest guy in the room, no matter what room he was in, and thought he had a better path to doing it and didn't follow the system. And they said, we coached him. We did everything we could. Thinking back to when I was a franchisor at Shelf Genie and I had 100 franchisees I was supporting across North America, our best performers were the ones that followed the system the closest. And that sounds so cliche, JR, but it was true. Those were the ones that really performed. There's a reason why you get into a franchise system. So is anything entirely de-risked? No. But if you're willing to have that humility to go in and follow the playbook, you increase your chances significantly.
Yeah, I think this process can be humbling for a lot of people because in a lot of ways, becoming the owner, you're going to find things that you thought you were good at as an employee just aren't really relevant anymore. And I would imagine coming back to the point you made a minute ago about the people who are following the system, just having that level of tactical focus, being able to say, this is what I need it by this time frame. Here's what I think good looks like, which a lot of people dance around because they're kind of uncomfortable with being that blunt. But that directness, I would imagine, and just that willingness to get into the details has to be pretty important to being successful as a franchise owner.
Couldn't agree more. And people oftentimes ask me, what makes a good franchisee? And I talk about what we just discussed, that humility to follow the system. But you also have to be hardworking and you've got to be halfway decent with people. That's just business ownership 101, right? So if you check those 3 boxes, your odds are pretty good.
What are some of the other mistakes that you see people make that you would counsel our listeners to try to avoid if they're interested in this?
I think every business there's going to be some point, whether it be 3 months in, 6 months in, when maybe you look at your spouse, you're like, is this the right decision? Did we make the right move? There's going to be a hard time. Working for someone's hard, business ownership's hard. And there's going to be a point where you probably second guess yourself. You say, do I keep putting money into the marketing, right? Or maybe my expectations were that I'd be further along profit-wise. And you have to kind of push through that, right? And so, it's just so normal. And there will be a point where it's, do you fund marketing further? Do you invest in that next employee? When you need half an employee, do you invest in a full employee with eyes towards growth ahead? It's doing that extra little bit of work early on that just sets you up for down the road. And I'd love to say we have a perfect record. I am very proud of our record, especially within the industry. And there's a reason why we've kind of built the reputation we have. But end of the day, it's following the system and it's working hard and pushing through those times.
Yeah, and I think it's important, certainly for people who are considering this, to come in with a realistic view of it. To me, it's a very intriguing opportunity in terms of how you commit to spend your professional life, but also potentially how you look at your investment mix. In both of those lights, I think it's really interesting, but you also obviously don't want people coming in with a false view of what it's really going to be about from a financial perspective or from an operational perspective.
No, and I tell people that all the time because we do get a lot of folks that will reach out and say, I can pick up pretty early that, hey, this may not be the right fit for you, at least not in this season of life. There's never a perfect time to step into business ownership. There's never a perfect time to have a kid, to make a big career transition. But is it going to be better tomorrow, or is today still the best day to make it happen based on where you want to be one day?
Any last thoughts that you would want to make sure that our listeners take away from this conversation? If they're thinking about this, or maybe they weren't thinking about it and now they are, that would be helpful to them as closing thoughts.
Yeah, when you look around, so many other people have stepped out and taken the plunge, if you will. And I just love it and get validation from clients to say, gosh, I wish I'd done it sooner. So thankful I did it when I did. So I always encourage people to just get off the couch. I'm a big believer that activity breeds activity. And I think getting in the game, there's entirely no downside to other than spending a little bit of time, a little bit of bandwidth to learn more. So yeah, I would love to share a free copy of our book, JR. It's about 90 pages. It's been a great resource. We've sold thousands of copies. If you want to buy it on Amazon, all the proceeds go to Hope International, great nonprofit that we support. But we'd love to share a free downloadable copy. You can come out to our website at frambridgeconsulting.com. I think that could be a good first step. And then if you'd like to take a next step and jump on a call, I'd be happy to help.
Terrific. I'll definitely make sure that we reference the book and your website in the show notes so people have access to that. So John, thanks for this. To me, it's an area that I think a lot more people, as they start to think about, like, how do I get myself off this treadmill of corporate life, will be thinking about. And whether they choose to do it in the owner or operator construct, whether they choose to do it as a supplemental thing to what they're doing in their full-time job, or whether they want to dive in fully, I think it's just important for people to be seeing this as an option for themselves. And I know I'm preaching to the choir on that because that's your life and your business, but I think it's an important topic. And that's why I wanted to talk today. So thank you.
Yeah, thanks for having me.
Yeah, absolutely. All right. Really interesting conversation with John just now about franchising. And let me try and sum up some of the key points. First is this idea that career success and financial security are not necessarily the same thing. A lot of people spend decades building impressive careers, higher incomes, strong resumes, but their entire financial future is still tied to a single employer and a single paycheck. And one of the biggest shifts that John talked about today is moving from purely earned income toward ownership-based income, assets and cash flow that exist independent of your day job. Second, entrepreneurship doesn't necessarily have to mean chaos, massive risk, or working 100-hour weeks. I think a lot of people still view it through the lens of Silicon Valley startups and people betting everything on an idea that starts with working in their garage. But John lays out a very different model, acquiring or building service businesses with predictable demand, proven systems, and scalable operations. That's a really different conversation than quit your job and hope it works out. And finally, this conversation was about optionality. Not everybody wants to retire early, and not everybody wants to become a full-time entrepreneur, but more and more people do want flexibility. They want more control over their time, their income, and their future, especially in a world where everything seems to be changing so quickly and traditional career paths feel less stable and more risky than they ever have. The broader point is this: ownership changes the way you think. It changes the way you think about risk, income, freedom, and long-term security. And whether or not franchising is right for you, I think John challenges all of us to think more intentionally about what we're actually building over the course of our careers. Thank you again to John for joining me today. I invite you to subscribe to Career Sessions on Apple Podcasts and Spotify or YouTube. If you found this discussion enlightening, sign up for my membership community, which is called Pathwise, and our newsletter, Path Wisdom. Thanks. Have a great day.